Good morning and welcome to the Killik market update. This week we have seen markets recovering some lost ground following the weakness last week, particularly over in the US. So here's the chart for the S&P 500. As you can see, it did decline quite heavily last week, but since then there has been a clear recovery as some buyers have returned to the market. Now at the moment it is corporate reporting season. We have got lots of corporate results coming out. For example, PayPal results last night were very strong, very much ahead of expectations. And if we do get more results like that, then this could potentially be good for market sentiment. Over in the UK, however, the market has recovered, but not by the extent to which it has in the US. So have a look here at the chart. You can see the decline last week and then a very, very tiny recovery this week. The reason they're probably a bit behind the US is probably the fact that Theresa May now wants to extend the transition period for Brexit. And this is really just prolonging the uncertainty we've had for so long. And it continues to make it very difficult to invest in domestically focused UK companies. So I think this is probably the major reason why the UK market has not recovered as much as the US market this week to date. Also this week we are looking ahead to the next budget, which is taking place on the 29th of October. Now Theresa May recently said she wants to end austerity in the UK, and that does present a few challenges for Philip Hammond, the Chancellor. He's already made some quite large commitments, for example, to increase the level of funding for the NHS. So how will he raise money to increase public spending even further? Well, there has been a bit of speculation about how he could potentially do this. One source of funds could potentially be income tax. Now, one of the Conservatives' main pledges was to increase the personal allowance and also increase the threshold at which the higher rate of income tax kicks in. And they wanted to do both of these things by 2020, but if further funds are needed by the government, then this could potentially be put back a little. Another potential source of funds could be pension tax relief. This is very expensive for the government, and there has been a bit of speculation that perhaps the government will stop offering tax relief to those who do not have any earned income. So at the moment, even if you have no earnings, it is possible to contribute a small amount to a pension each year, and you still get the tax relief on that. But some have speculated that this is quite costly for the government, so it could be a potential source of funds for Philip Hammond. And last of all, apparently the government has been looking at allowing councils to borrow more in order to fund further building of social housing. So this could potentially have implications for social housing funds such as Civitas Social Housing. And lastly, one of Trump's major policies was to decrease regulation in the financial sector. And this week we've had further evidence of that being put into practice. Now, after the financial crisis, the Federal Reserve developed a list of too big to fail institutions, mainly consisting of banks, but also consisting of 4 insurance companies. Now, these institutions on the list were subject to increased supervision from the Federal Reserve and also increased regulation, and all of this was very costly for these institutions. Now, when this list was first developed, it contained 4 insurance companies: Prudential Financial, which by the way is no relation to the Prudential we have here in the UK, MetLife, AIG and GE Capital. Over the years, these institutions have gradually been removed from that too big to fail list, and yesterday Prudential Financial was removed. That was the last insurance company to be removed. So I think this does denote that the US is really decreasing the level of regulation in the financial sector, and it does pave the way for these companies to become a bit more profitable. So definitely something to keep an eye on there. Now, looking ahead to next week, as I said, it is earnings season at the moment, and we do have lots of companies reporting. We've got the technology companies that I mentioned earlier, as well as Antofagasta, Boeing and Northrop Grumman. That's it from us. Have a great weekend, and we'll see you next Friday.